Okay, ladies and gentlemen, welcome to WebEx 2024. Thank you very much for taking time out of your busy schedules to be with us here today. As you know, WebEx is one of the largest global conferences in Asia, held in Japan for companies and individuals working to promote the Web3 sector. さて皆様、本日は WebEx2024 にようこそお越しいただきました。ありがとうございます。昨年も開催されました WebEx ですけれども、Web3 分野推進に、動く企業や個人のための日本で開催されるアジア最大規模のグローバルカンファレンスとなっております。日本最大の暗号資産 Web3 メディアコインポースが主催して、日本国内外の主要プレイヤーメディア、一般来場者が一堂に会する2日間をここ The Prince Park Tower 東京にて開催いたします。So CoinPost, Japan's largest crypto asset and Web3 media company, is organizing, as you know, this two-day event at the Prince Park Tower Tokyo here today and tomorrow. The event will bring together major players, media representatives, and public visitors from Japan and abroad.プレゼンターに、講演いただく内容ですけれども、皆様の、ステップアップに役立つものばかりだと思います。チケットを持っていればすべてのセッションの、聴講が、可能となっておりますので、どうぞお気軽にご参加いただけたらと思います。So the content of the presenter's lectures will be extremely useful for anyone who's going to be watching and hearing today, I'm sure. If you have a general ticket, then you can attend any and all sessions, so please feel free to join us anywhere and at any time today. 申し遅れましたが、私は本日の司会進行役を務めさせていただきます。ジャスティン・パターソンです。どうぞよろしくお願いします。And sorry for the late introduction. My name is Justin Patterson, and I will be your host and MC for today and tomorrow.Okay, so now I'd like to move on to our first session. 早速ですが、本日の最初のセッションに参りたいと思います。今回のテーマですけれども、Building Ventures with Web3。Web3 でベンチャーを育てるというお題となっております。それでは登壇者をご紹介いたしましょう。まずは Hello Labs, Killer Whales and Metaxbrands Founder and VC, Sander Gortjes.Sign Futures partner and CMO, Mark Lee, joined by Cash Incorporated founder and CEO, Shinichi Takatori. 皆様大きな拍手でお迎えください。Come on to the stage, please. よろしくお願いします。All right. So we're going to go ahead and get started. If you gentlemen are ready to go, I'll just hand it over to you. よろしくお願いします。
Thank you. Hello, my name is Shinichi Takatori, as explained, and I'm going to be moderating today's panel. So first of all, we would like to kick off as a self-introduction first. And quickly by myself, I run a FinTech startup since 2015 and running a digital payment platform called Cash App. And it's totally fiat, so I'm pretty keen on learning how these guys are running and raise capital in this space. So very nice to meet. And pass the baton over to Sander, maybe.
Yeah, thanks, Shin. Quick intro, Sander Gortjes from the Netherlands, Europe, 40 years young or old, depending on how you look at it, I guess. My background is that I used to work in high-performance digital marketing, and in 2017, a developer said to me, hey, we need to build this software that we're building on Ethereum. And I was like, what is Ethereum? A couple of years later, we sold the company. I still had the Ethereum, started doing angel investments just before DeFi summer. And that evolved to us also starting up a company. The company is called Hello Labs. And the focus of Hello Labs is to become a major player in the Web3 entertainment space. Most people know us from the television show Killer Whales, which is basically a Shark Tank, but then for Web3. We broadcasted season 1 on Apple TV, Amazon Prime, and a couple of other streamers. And we're really trying to bring more and more people into Web3 and understanding what is being built, what innovation is there, and what our founders are really doing. And my role on that is the CEO, and I mostly look at, okay, which types of projects are interesting, and how do I look at that from an angel VC perspective, but at the same time from an entertainment perspective, because those views on the market for retail might be very different for what my vision is as an angel or a VC.
Thank you.
I'm Mark, partner and CMO at Sign Futures. So I think like most people, a lot of people in DeFi, I started my journey in TradFi back in 2010. And then around 2015, I kind of pivoted and went into Web 2 for a while. So I was consulting a lot of Web 2 projects, startups out of Silicon Valley, focused on everything from FinTech to enterprise software. Around 2017, 2018, I got exposure to blockchain as a form of emerging tech. And I went all in on blockchain starting about 2018. And I've been kind of consulting a lot of the prominent Web3 projects in this space on the growth side. 2021, we started Sin Futures. We're a decentralized derivatives exchange that's deployed on Blast and Base. I think relevant to this panel, I'm not a professional investor, but I'll speak on our experience raising for the project. We raised about $38 million from some of the best VCs like Pantera, Standard Crypto, Framework, Hashkey, and more. And also some of my experience as an angel investor.
That's great, thank you. So yeah, related to that fundraising topics, we would like to kick off as a first topic, the unique funding model. So the startup has always been, needing to raise capital. And what are the unique funding models for this crypto and Web3 space? And Mark, as a more like an operator or the issuer of the business player, and the Sander is more for like ecosystem builder and platforms for the issuer of the tokens and all those players raise capital. So how do you guys see unique funding models? What are the difference between fiat-based or the usual startups that you guys seen before?
Yeah, I'll take this one first. So I think that there is a big difference also depending on which time frame that you're looking at it, right? So when you look at like 2020, startups, projects in the space for basically raising capital, sometimes in Bitcoin, sometimes in other cryptocurrencies. If you fast forward that to 2021, you saw these investment theses shift a little bit. So there were more projects coming to market, the equal amount of VCs, the equal amount of money, more money was flowing in through retail. So you still had like the VC model where you basically got funded in fiat or in crypto, but you also had a retail funding model, and that was mostly pre-sales, or it were NFT launches and stuff like that. So a lot of money flowed into the ecosystem in that way. If you look at it today, I think that the amount of projects that are coming to market has never been bigger. It's pretty much insane if you look at how many decks land on our desks every day, and not necessarily the quality has gone forward. There are a lot of copy projects being launched. There are a lot of projects that basically have a very good theoretical basis, but not necessarily a good business model behind it. So what we now see is that the existing L1s and ecosystems, there are still a lot of them with a cash-rich position or a token-rich position, and so they are still investing alongside cohorts with VCs and angels. But there are also like a couple of new foundations coming to market, a lot of bigger players that have raised a lot of money and have a high valuation, and they're basically trying to grow their ecosystem by giving lavish token grants. It's basically the same model, and you have more players in the market right now.
Mark?
Yeah, when I first started in this space, I feel like it was a much more accessible kind of investment platform for most. A lot of people who were around in 2017, 2018 were probably familiar with the IDO model or the ICO model. There are a lot of flaws in it, but the thing that worked really well for ICOs and IDOs is it gave retail participants a chance to get in at the ground floor. As the industry matured, I think that's changed a lot, for both better and worse, right? Now it's become a lot more institutional. So you see this like, in terms of the funding style, you see the gap between Web 2 and Web 3 kind of closing a bit. I think for legitimate projects that are raising, it really depends who you're raising from. If you're raising from like your traditional institutional investors that not only do Web 3 but also do some Web 2 investing, you're going to look at terms that are very similar to Web 2 terms. Meaning, if you're not raising, you're probably raising more in equity these days with token warrants. I remember in 2020, 2021, a lot of like traditional VCs were still open to token-only rounds. I think that's fallen out of favor a bit now because they figure why not take the equity and have the warrant there just in case. It's a win-win for them, right? In terms of like the changing narrative for raising, I do think there's something that's coming back around the IDO and ICO. Again, it's all about like how does Web3 differentiate from Web2 in not only the way we build the protocols, but the way we fundraise for them. So we still want to look for a way to get in early participants from the community, from users, from just supporters in general, and give them a chance to get in at the ground floor. It's still quite challenging for that right now. I think if you see a lot of these big projects that have raised in the last year or two, they've gone the traditional institutional fundraising route. But the sentiment is changing in that it seems like, you know, if you look at even crypto Twitter, right, a lot of people are kind of talking about how they're not thrilled that the institutional investors are, you know, holding large amounts of supply from very early on. I think even centralized exchanges are starting to criticize that a bit. I mean, don't take my word for it, but it's just something I've been hearing. And so I do think that there's some path to like decentralizing the funding environment for retail and giving them more access, whether that's through a newer form of an IDO or even a comeback of the IDO is unsure because there are a lot of regulatory concerns around that. And we still do have a bit of that, like Binances of the world have launch pads for investing into projects before the token launches. It's just that it's still a bit limited.
Got it. Very, very interesting because I'm pretty new to the markets and we usually raise capital only in exchange of equity, but then this space has the token. And I think, as you guys mentioned, I think the environment has been changing. And do you guys recommend any like a best practice or the funding model that the early days maybe not, you know, issuing the token might be better at these days, or like do you guys recommend any mix of those like a blends when you raise capital?
Yeah, I do see more and more it's becoming a trend that some projects are choosing not to launch a token for various reasons. Sometimes it's a lot of times it's the regulatory reason. And then sometimes it's thinking about like the value capture, right? You really have to be honest with yourself and say, why token, not when token, right? So what does this token capture in terms of value created by the protocol or by the network? And how does it get redistributed? The bigger question we need to start asking, I think, is why token and why not equity, right? Like you mentioned, you're used to the equity side. If I have to be real, the reason a lot of projects choose tokens is because it's a quicker path to liquidity, quicker and easier path to liquidity. If you look at like the Web2 space, when you start a project, you have equity, you're not going to see a liquidity event probably until 7 to 10 years in, right? Whether it's through an M&A or it's through an IPO. In crypto, if you have a token, you can reach liquidity within a couple years. But again, I think this is changing too because there's limited liquidity in the market right now. And we're seeing that with all the token launches that are coming out, even with big name projects that are underperforming in the market. So I do think there is a shift coming in that front. Yeah, I think.
Yeah, true. Just to come back to your question, whenever I go into a project, I let's say 7 out of 10 times I do equity, because I really like to invest in the projects that are basically companies. And I think there's a big differentiation as well, right? In the Web2 space, we invest in companies, we invest in founders, we invest in technology, we invest in underlying basics, right? Financials. In the Web3 space, you're quite often investing on speculation. And what I like to do is really have a deep dive into a project and a company and see, okay, who's the founder, what they're actually trying to achieve, and what is the potential business model here. Of course, in the Web3 space, there is a lot more dynamics because you have different blockchains, you have different ecosystems coming up. So for us, definitely the most important thing is how do we make sure that this company actually builds a product that is profitable within a certain amount of time. And tokens are for a lot of people a quick in and a quick out. So also the way these tokens are being distributed to the early stage investors, but also the retail, is very important. And I would tell you right now, tokenomics are a science in itself. It's not easy to figure out at the beginning what is a good tokenomic set and what is a bad tokenomic set. And also you see in the space more and more that VCs definitely have an opinion on these tokenomics whenever you're raising. So from a founder's perspective, it depends on what your objective is and what your angle is, but I always like the fact if a founder comes to me and says, okay, Sander, we're looking to raise, we're willing to put up some equity, and we grow from there.
Yeah, I will add that, you know, when I talk about path to liquidity, the days of like massive unlocks early on are over, right? I think VCs and just investors in general, even exchanges, they want to see a pretty drawn out vesting period and a significant cliff, meaning like it could be a 6-month to a 1-year cliff. So now we're starting to see the vesting schedule converge with like that of Web2. It's not very different, like similar 3 to 4 years seems to be the standard now. I mean, some projects are getting away with 2 years or so, but I think that's becoming much less common.
Got it. Yes. So yeah, it's very interesting to see raising capital, whether or not you look at the token itself or the company itself, then that converts into equity side. And so when you guys also do angel investing and also, you know, raising capital, maybe moving on to the next topic of balancing decentralization with the governance. So maybe managing the playbook or the game, what's the best balance of like bringing the governance to the decentralized world? Because that's kind of like counterintuitive, it sounds like, and how important that is. And if there's any geographical like characteristics and focus you guys have in mind, please share with us.
Yeah, sure. I'll take this one first. So it's a really hard topic. Decentralization is Web3 and Web3 is decentralization, but what you definitely see is that when it comes to investing, we very much still invest on the team and what they're trying to build. And especially we invest in a lot of infrastructure, DeFi type of solutions, platforms for gamings in the past. And decentralization can be achieved in many different ways. It can be achieved in the way the technology works. It can be achieved in the way the company is set up, and it can be achieved in the way the token is distributed and managed. Right? These are very different topics that you need to discuss. And for us, number one is when you look at the company itself, we look at it from a Web2 perspective. What is the company doing? What are the fundamentals? Where are they going? But if you look at the token itself, we focus more and more on the Middle East and Asia parts of the world because there are models and licensing models there in place that allow a company to issue a token and manage that from a legal positive point of view. The last couple of years, there were like a lot of projects launching a DAO and managing token supply through that. A good example is ApeCoin, for example, with a council and a voting mechanism in there. Some people like that model, some people don't like that model. I think it's always good for a company to be in control of what they're doing instead of a DAO being do that. But there are also examples of a DAO being run properly. So yeah, I think it's somewhere in the middle. It's not easy to find a good example on all three aspects of the model, but we're getting there.
Thank you. Mark, do you take on?
Yeah, going back to what I said a second ago, so the question we have to ask is why token, right? And really the right answer should be because it's the path to decentralization in terms of decentralizing not only the value capture of the protocol itself, but also the governance. DAOs are, you know, the best way to approach this, but there's a big challenge in DAOs in the sense that the two things that we look at when we think about how do we properly decentralize a project in an effective way is increasing participation, right? I think I saw some stats the other day that DAO participation is single-digit percentage in terms of the number of holders, not in terms of influence, right? So you have these like big kind of holders, whether they're institutional investors or core teams who influence a lot of the vote, or whales who influence a lot of the vote. We have to look for more ways to incentivize and engage with token holders in general to not just speculate on that token, but use that to make help make governance decisions. I mean, you could do that by delegating, but I would think the best way is for more people to get actively involved in the process. The other challenge with DAOs, I think, is sometimes I think about like decentralized governance and DAOs, and I wonder what's the difference between public equities and tokens, right? People say, oh, we're decentralizing governance of the project because all the token holders can vote on the direction of the project, can vote people in and out, et cetera. But you could do the same thing with equities, right? Like in the public markets. So it's not a question I have an answer to right now, but it's something that we think about actively when we think about like this idealistic world, decentralized world where a project could run completely autonomously through the power of the community and the token holders. I feel like we have to do a better job at differentiating like what can we do in Web3 that's different from the public markets, and then how do we enable closer participation with your average retail token. I think that's what's most important. How do we get like the normal speculator and token holder more engaged in your project where they actually have some vested interest in the direction, not just the token price, right?
Yeah, that's so. Moving on to the next topic, I think the more like a regulatory perspective, navigating regulatory landscape is very critical, I think. And how do you guys see over the years, like how it's evolving and what kind of directions that's driving into? Sander?
I always give you the example from a television show that we're making, right? We're making a television show called Killer Whales. It's basically a Shark Tank, but it's put on Apple TV, Amazon Prime, and we distribute it across the world. So when we were starting up this idea and producing it, it was 2022. This was during the maximum crackdown from the SEC on anything that looked like a token was a security, et cetera, et cetera. So if you look at the influence of legal and securities and tokenization and stuff like that, for example, the format of our show has been changed through that, because our initial idea was, what if we put 15 projects on Apple TV, Amazon Prime, we have reached 600 million people, and my dad, who isn't in crypto, can watch it from his recliner, at home, and he can basically invest into the project. That would be the ideal world, for us to grow the Web3 space. But when we were building this, the crackdown was so heavy that we decided, let's take the entire investment thesis out of the show and let's make it a show where we basically give the project grants and advice from the whales so that these projects could grow better, et cetera, et cetera. So there's definitely a big impact. If you look at the sentiment right now, would we be able to produce a show where you do invest into a project? Still tricky, but doable in certain areas of the world, right? So in Asia, we could probably do it. In the Middle East, we could probably do it. But it's in America or the US, for example, it's still a no-go. It's too much risk. There is no regulatory framework in place to do something like this, even though you would say Shark Tank or Dragon's Den, they're doing exactly the same. But just so you understand, they never really invest into these projects, right? What you see in television is more, the entertainment part, et cetera, et cetera. There are so many examples of these television shows that the whales actually, or the sharks, don't invest in the end. So, yeah, I think there has been a lot of progress on the legal side. There has been, even when we do investments, it's a hell of a less work than it was a couple of years ago, and also the way you set up the contracts and you structure it has become more lenient. It has become more favorable to the average VC to get in, and a little bit easier to actually invest. But yeah, a lot of the limitations still exist.
Mark?
Yeah, definitely regulation impacts both sides of the equation, those who are taking funding and those who are providing funding, right? Less so on the institutional side, although I do know a lot of funds, crypto native funds, who, even if they're US based, they set up in a different jurisdiction because there's still a lot of uncertainty around what tokens mean, at least in the US market, but certainly in a lot of other markets as well. I think there is some regulatory framework right now for retail investing in projects. I mean, it's no different from kind of any other kind of alternative asset investing, meaning as a US investor, as long as you're an accredited investor, you can realistically invest in legitimate projects, right? I mean, my personal opinion is that the accredited investor rule, which just means you have to have a certain net worth or a certain income to invest in what they call risky assets or risky investments, is a little misguided. And the reason I say that is, like, if I'm a US citizen, I can go to Vegas and I can put my entire life savings on red and lose it. And that's okay. But the moment I say, hey, I want to put a couple thousand into this great startup that I came across, that's when the government says, no, 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 you need to be responsible and you need to have a certain amount of assets before you can make that decision. And I think that's a major barrier, this accredited investor rule. And this applies to Web3 as well. I do know that the SEC is looking at, I mean, there are members within the SEC that are challenging this accredited investor rule, saying any adult should be given the opportunity to make their own decision, right, in investing in projects. And this definitely flows into Web3. Like I mentioned, will we see a comeback in IDOs? Maybe, but the big barrier is always going to be the regulatory side. So I do think regulation plays a significant role in the way projects get funded. But like I mentioned earlier, because there's this convergence of traditional investing and Web3 investing, I think regulation has maybe slightly less of an impact than it did a couple years ago.
Very interesting. Oh. Yeah, since that we only have a couple minutes left, so a lot of unique challenges in this space, but at the same time, probably pretty early, like a newcomer's benefits. And do you guys hope that this world, I mean, this space would be like kept in more like a niche markets as it is, or more like a democratizing and more like reaching to the mass markets to the world? And if that's so, and what are the critical things that's needed to solve?
Yeah, so I think all of our goal, like everyone here and everyone building in crypto and in Web3, none of us want this to be a niche market, right? We're looking for what everyone calls, it's a little cringe, but the next billion users. But I think before we get there, we have to be real with where we are today. That means looking at not only the regulatory environment, but also things like UI, UX. Is it actually feasible for, you mentioned having your father on the recliner watching the show, learning about crypto, but can he realistically go and use these dApps, right? And the answer is probably not. I mean, there are way too many barriers. And so I think we're all making good progress. For us, like, we're trying to simplify the user experience as much as possible, make it approachable to mainstream. But I think building in Web3 is very challenging, right? Because you have two paths that you can take. Do you cater to like the degen crypto native audience? And that's going to give you the best product market fit for today. Or do you start building for the mainstream, which means you're not going to resonate as much with the crypto native audience? It's a very long-term game. And actually, funding comes into this because if you have enough funding, maybe you can go the more mainstream route because you have the runway to support it. But if you're more of a bootstrap project, I think you do have to support the crypto native audience. Ideally, you do a balance of both, but it's kind of like this split that we have right now.
Yeah, I align on a lot of things you're saying. I do want to add is that, the youth has the future. Right. So if you look at like high schools, et cetera, at least where I'm from, like Middle East and Europe, people 15, 16-year-old that trading crypto the entire day. So they understand how it works, right? They understand what the metrics are, the mechanics. I think the gap that we right now have is a gender gap, right? So the youth understands what crypto is, how the technology works. They at least grasp, a basic understanding. But they don't necessarily have the capital to invest. And where the capital is, typically a little bit older people, for them it's really hard to access our space. And especially if you look at the tech-rich projects in our space, it's really hard to understand what you're doing. And that's why we think that the first wave of adoption are in the things that people understand: gamify, metaverses, NFTs, and in the last bull run. And I think the biggest challenge that we have right now is that we don't have those narratives in this space, besides gaming maybe. So bullish, retail should be able to come in, but it will take a little bit more time, I guess.
Got it. Thank you so much. So the time has passed, and this is everything for the panel. Please, big hands of applause to these panelists. Thank you.
Thank you very much. ありがとうございました。So before we finish up, we'd like to get a group photo of you here on stage. So could you please stand up and make your way to the middle? ここでちょっと、写真を撮らせていただきたいと思いますので、カメラの方お願いします。はい、皆様改めて大きな拍手お願いします。ありがとうございました。Thank you very much. Sander, Mark, and Shinichi, thank you very much for that wonderful panel. Okay, so it is now time to move on to our next presentation in just a few moments. Give us just a few minutes to get ready. この後ですね、まもなく次の、パネルとなりますので、しばらくこのままでお待ちください。